This will be the highest value Bybit tutorial you've ever seen. Not only will I teach you exactly how to use Bybit, I'll show you how to unlock access of up to $37,100. I'll also show you how to join a powerful trading community and how to copy some of the best trading strategies in the world. Because I'm one of the biggest traders on Bybit and I've built a relationship with them over the years, they've agreed to do something really special for you guys, something you won't be able to find anywhere else. They've agreed to pay for your access to Whale School, my $2,000 trading course, a trading course that's put 100,000 like-minded people just like you through and taken them from novice to expert as a trader. You'll gain access to all the lessons and all the strategies that have taken me from zero to an 8-figure trader. And to top it off, I'll be doing a $5,000 giveaway to lucky viewers who decide to join us on this journey. So to unlock up to $37,100, let's go through the following steps and I'll show you exactly how you can unlock these benefits. Before we get started, remember this video is going to be very extensive, which means that if you want to get to a particular point and a particular answer, reference the timestamps listed below and you can see the category that you need to complete. If you're excited to get started on the trading journey, click the link in the description below. Depending on where you're based, whether you're in the EU or you're global, you'll need to use the particular link, Bybit EU for European Union. And if you're anywhere else, you can use the other Bybit link. Remember, it's vitally important that if you want to unlock all the access, you have to use the particular link below because we use the user ID generated from the link below to give you your bonuses. So remember, if you are based in the European Union, you need to use Bybit EU. This is due to what's called MiCA compliance. And if you're based anywhere else, you can use the global one. I am based elsewhere, so I'm going to be clicking this link. And this is how you're going to unlock your sign-up bonuses. So once you click the link, we're going to begin to sign up to Bybit. As you can see over here, you're getting up to $30,050 in welcome rewards. You're getting a guaranteed $100 sign-up bonus first and foremost by completing these very simple tasks. As you can see over here, if you complete KYC, you'll immediately claim $20. By the way, KYC is called Know Your Customer. It's vitally important that you do this, not only to protect yourself, but it's also to protect the exchanges against regulation compliance, as well as money laundering or any sort of illegal activity which tends to slow down the space. It's important for you to do this because if you lose access to your account for whatever reason, you can always use proof of who you are to regain access so you don't lose all of your funds. So follow the following steps over here. By depositing $100 or more, again, you'll immediately get access to another $20. By trading $10 or more, which I'm going to show you how to do today, you'll unlock another $20, which now has given you $60. And over time, when you've traded more than $10,000, which might sound like a mind-blowing amount to you, it sounds like a lot, but it adds up very, very, very quickly. Remember, I'm going to introduce you to something called leverage, which means if you open up a leverage trade, even with a small amount of capital, such as $100, which you've already deposited, you will immediately do $10,000 in trading volume, and that's going to give you access to your next $40, thus giving you your first $100 in welcome rewards. So again, use that particular link in the description below. Click that over there. So let's put the email address in. Once you put an email address in, put in a password that not only you'll remember, but also is difficult enough that you won't be hacked. I always advise that it's a good idea to create something different to your social media or any other sort of accounts that you typically use. And the reason being is if those accounts ever get hacked and a hacker gains access to the database, they can always cross-examine with that password to see if they can gain access to your account. You're going to have to implement security measures as well, like two-factor authenticator, which we will show you how to do in a moment. So create your password over there and claim your welcome rewards. So we're officially logged into the account. Go through to your email address. If you need the verification code, it should be sent over there, and that will prompt you for what to do next to get into the account. Once we're in the account, I'm going to show you how to use Bybit and how to make deposits. If you're already at this point and you're wondering what is Bybit and you haven't done these steps yet, remember Bybit is one of the biggest exchanges in the world. It's a top 3 exchange, which means that's where people go to trade cryptocurrencies, to buy cryptos, to sell cryptos, and to further their financial wealth through using things such as derivatives. There's many different ways on Bybit in which you can make money. All you need to know for now is that Bybit is one of the most secure, highly credible exchanges, one of the most liquid exchanges that's out there, most trusted and most competitive. We're going to go through a couple of points. First and foremost, we've just completed and shown you how to open an account on Bybit. That is the most important thing to do because it unlocks access to all of the various different rewards that you're going to get, and you get your savings on your trading fees. Then we're going to show you how to familiarize yourself with the trading exchange, how to take a spot trade, how to take a leverage trade, how to set your stop loss when you're taking these trades, and how to trade on Bybit TradFi. There's been a massive crossover where crypto is starting to introduce traditional markets, things like access to gold and stocks. So you have a one-stop shop where you have access to absolutely every financial tool that you need to get yourself to where you want to be and to constantly make money. But before you can actually take a trade on Bybit, we need to get money onto the exchange. And this is how you do it. So once you've logged into Bybit, you'll see all the various different tabs listed on the top. Don't get overwhelmed by all this information. We're going to go through it step by step. The first thing that we need to do is we need to get capital onto the exchange so that we can actually take a trade, and I can show you what to do to make money. So the first thing you'll do is it shows on the top right-hand side, it says deposit. Go through and click that button. Once you've clicked deposit, it will give you various different options. You have the option of depositing crypto from another exchange. So if you have crypto somewhere else and you want to send it over here, you can simply click USDT if you want to deposit stable coins. Then you select the chain that you want to use. For example, do you want to send it over Solana? If this is what you're doing, it's vitally important that when you go onto the other platform, which is where you're sending the stable coins from or whatever the crypto is, and you make sure that it matches the network effect of this address. So for example, if I decide I want to send USDT right now to this address via the Solana chain, then I need to go on my other device and I need to make sure that when I click withdraw from the other device, that it's also USDT and it's also on the Solana chain. This is vitally important. I know it seems simplistic, but let's go over it again. Let's say, for example, I want to send Ethereum to this wallet. I want to fund Ethereum to this account. And I want to send Ethereum via 𝗙𝗘𝗕𝗏. Then when I go onto my other wallet, I need to click, because here's deposit. This is deposit Ethereum with 𝗙𝗘𝗏. I'm going to go withdraw Ethereum with 𝗙𝗘𝗏 and make sure that those addresses match. That way you can make sure that you get your funds. What happens if you make a mistake? If you make a mistake, you need to get in touch with the exchange. Bybit have one of the best customer supports in the entire world. Contact their customer support, make them known of the error immediately, and sometimes you'll pay a small fee to recover the funds. Now that we know how to deposit crypto, let's have a look at how you can get crypto directly through the exchange. We call this fiat. Fiat is, remember, your local currency, and you want to buy crypto, for example, using your bank account or a credit card. Again, in the deposit section over here, you're going to see fiat deposit. Click over here where it says fiat deposit. Now you have the optionality where you can either buy USD using a payment method, or you can go through to this section over here that says P2P. If you go through to P2P, it will show people in your local area that you can either facilitate a bank transfer, you can do a Zelle, you can do a Venmo, you can sometimes pay through PayPal. And this is another way that some people will get crypto onto the exchange. Once you've gone ahead and you've actually deposited crypto on the exchange, we can move on to the next step. So I've just done that. I deposited from another exchange. You can see over here, I just sent through Solana. $10,000 has arrived and it's represented here in my account. If you go under the assets section, you'll see it over there. Now you'll notice it says over here, funding account and unified account. You can click on that. I'm going to click on unified account. When you click on unified account, this is where your funds are represented. So it's just under $10,000 because the USDT price is also always slightly marginally fluctuating. Now, if your money is not over here, all you need to do is go through to the other account, which is the funding account. You can see all of your accounts will be listed over here. You click overview, it says funding account, unified account. The only difference might be yours may have landed up in the funding account and not the unified account, in which case all you have to do is transfer it. So if yours is represented over here, go to the right-hand side where it says transfer, click that button, and you should be able to select all your USDT. So in this instance, the 10,000 would be there, and we're going to send it from the funding to the unified. The unified account is really where all the magic happens. This is where you get access to all the various different trading tools and everything that you need. So before we get into that, let's have a look at a couple of the other tools that are listed above. This is going to be your real terminal where you're going to find or get access to absolutely everything. So for example, if you click on markets, you can see over here, it's going to give you a bit of information about what's happening in the market in terms of the top gaining coins for that particular day, the newly listed coins. A lot of traders like to trade coins that have just listed because it brings in new hype and volatility. The trending coins, you have a bit of a market sentiment indicator. So there are a whole lot of different tools over here. Remember, Bybit is one of the most liquid exchanges in the world, and it holds some of the most amount of tokens or coins. So you're going to get access to absolutely everything over here. So that's your markets for you over there. If you go through to the trade section over here, this is ultimately where most of the magic is going to happen. We'll get into that in a moment. You got spot trading, futures trading, options trading. You got your traditional finance. This is where you're going to get access to things like gold and other tokenized stocks that they will be listing in the future. So the trade section is where we're going to spend the majority of the time. You can see over here, it says spot and futures. These are the two main ways that you're going to be buying or selling crypto. Now, most of you are going to start off in the spot section. Spot means you're buying the underlying asset. There's no derivatives, no fancy tools that are utilized, no forms of leverage. You're simply just buying the underlying asset. So for example, if you were to buy a house and you paid upfront cash for the entire house, there's no mortgage on the house, that is the equivalent of spot. Now, leverage is where people want to use other financial instruments to magnify the gains. For example, if you trade leverage on 10x and you deposit $1,000 and you're using that $1,000, it's leveraged 10 times, which is the equivalent of trading with $10,000. The safer route is always going to be spot trading. So I'm going to show you how you can buy and sell crypto with spot. Now, this is where you're going to get access to all of your various different tools. So first and foremost, you have your charts. The great thing about this is a lot of people have to pay for a TradingView membership so that they can actually use the tools on TradingView. So as you can see over here, you can actually draw within Bybit. This gives you all of your tools over here. You can draw your trend lines, your horizontals. You can use things like your Fibonacci tools to identify key areas of interest so that you know exactly where to buy or sell. And it gives you really access to absolutely everything that you would typically get on TradingView. TradingView is going to be better for organization of your charts, but this will more than do the trick if you're somebody that's new. And in fact, it's oftentimes better to do your technical analysis and your trade setups when taking live trades within this platform, because this is the true representation of the actual price that you're about to buy. Remember, different exchanges might vary marginally. So doing your technical analysis over here is probably one of the best things to do. You'll see on the right-hand side your order book. The order book shows live the number of trades that are coming through in terms of sells, which are in red. So this is the amount of people that want to sell over here. And this is the buys over here in green. And on the bottom, you can see 40, 60. It's constantly changing over here, showing that in the very, very, very short term, in this second by second basis, right now, as I show you this video, the shorts are slightly dominant, but most of the time it balances out. Now, to make absolutely certain that your funds are there, you'll see over here, if you go through to the bottom, it says unified account. That's just to make sure you're on the right account, which we are. And it shows over here your USDT balance, $10,000. So we're going to utilize that to buy some Bitcoin right now today. Remember, you don't have to buy an entire Bitcoin. So Bitcoin right now is $118,000. Maybe when you're watching this video, it's $200,000, or maybe it's all the way back down under $50,000. Whatever the case be, you can always buy a part of a Bitcoin. You never have to buy a full Bitcoin, right? We all aim to do that, but you can buy $5,000 worth or $1,000 worth. So for the purpose of this exercise, let's go through and show you how to buy some Bitcoin. So as you can see over here, it says BTC. Underneath that, it says USDT. You have a slider. Make sure you're on the buy. Make sure that it says spot, right? We're on spot, we're on buy, and how much Bitcoin do you want to buy? If you want to unload all of the money, then you would slide the slider to 100%. Maybe you only want to buy 10%. Then you can go through and select 10%. Or if you're a perfectionist and you want to make sure you buy exactly $1,000 worth, I recommend going through to the bottom section and physically typing in $1,000. There you go, $1,000, approximately 10%. Now, you have the optionality where you can still set a take profit and a stop loss. Most people that are buying spots are buying to hold it for the long term, so they're not doing this. But if you want to do this, click stop loss over here. It says advanced TP and stop loss. And when you click on the plus sign, it will pop this up over here. So if you're actually planning out a trade where you say, well, if price goes any lower than $100,000, I'm wrong, I don't want to be in the position anymore, and I wish to exit that trade, then you're going to put in your stop loss at that level. So let's say it's 99,999 is the level at which you're going to be incorrect on this trade. The important thing to remember is it shows you over here, you will lose 15.6% of that $1,000 that you put in should price go against you, which means you're going to lose about $156. But at least you're protecting the rest of the money. Now, remember, using this particular link in the description below would have given you access to Whale School. Whale School is my personalized trading course over here. And in that trading course, you can see we go through a whole bunch of different lessons. And one of the lessons I'm going to teach you, and it's my favorite lesson, is risk management. I'll show you how to calculate your risk when getting into a trade. That's going to be beyond the scope of this particular tutorial. So should we go ahead and we'll say that we're going to buy crypto over here? What happens if you want to set a take profit? Let's say, for example, you think Bitcoin is going to go to 130,000 and you just want this to be a trade setup. You're not looking to buy and hold for the long term. You'll write in your target over there, 130,000, and you'll click confirm. So now you can see I've already set up the position over here. We have our order setup. If I zoom in, we're saying that you will sell the entire position if a price first reaches $130,453, which is going to be our take profit. That's where we think Bitcoin's going. But if Bitcoin breaks below $100,000, we want out. We want to be out of that position. We've selected $1,000. That's how much we want to put in. So now let's go ahead and click buy. As you can see, you can double check everything over there. That's the current order price. That's how much Bitcoin we're getting for the current price of Bitcoin. There's our order value. It's exactly $1,000. And the time at which this contract will be valid is actually forever. It says good until canceled. So let's click buy. There you go. The orders have been successful. So it shows over here, open orders. There it is. The current open orders that we have is going to be the TP, which is the take profit, and the SL, which is the stop loss. So if you want this to be a long-term play, maybe you want to withdraw the Bitcoin and move it onto a ledger or some sort of an offline wallet, then you would need to come here and click cancel the order, and then those Bitcoin should reflect in your unified wallet. Now that we've bought our spot Bitcoin, let's talk about taking other trades, like a leverage trade. How do you take a leverage trade? You may have noticed as well, there's something called isolated leverage and cross-margin leverage. What is the difference between the two and which one is best for you to use? We'll talk about that. So there's two ways in which you can get to the futures contracts. The futures contracts is where the leverage trading happens. Leverage is exactly as it sounds. You're using a form of leverage, which means you amplify your gains, but you can also amplify your losses if the trade goes against you. Now, in order to get there, you'll see over here, it says trade. If you scroll down, it says futures. you have USDT, USDC, and inverse contracts. The one that you're mostly going to use is USDT. The reason why is USDT is the biggest stable coin in crypto. Now, if you funded your account with USDC, you'll need to select USDC. This is the correct trading pair. But the important thing to understand is USDC offers less options in terms of which coins you can trade. If you want access to the greatest amount of coins to choose from, you want to select USDT. So for now, go through to trade, go down to futures, select USDT, and then click on whichever coin it is you wish to trade. For example, if you want to trade Ethereum, but you mistakenly click on Bitcoin, that's okay. Okay, let's click on Bitcoin, and I'll show you how to change that. Now you'll notice, if you look towards the right-hand side on the top here, things look slightly different. Previously, this was saying spot. Now it says cross. You have isolated, cross, portfolio, and more details. You're mostly going to be toggling between cross and isolated. For now, we're going to go with isolated, and I'll explain to you why in just a moment. But first, I said to you, if you mistakenly clicked on Bitcoin by going through the trade, futures, and Bitcoin, but you actually wanted to trade something else like Ethereum, I'd be able to show you how to find it from another place. And that other place is going to be over here. If you click on the left-hand side, now you can see you can also access everything perpetuals, futures, options, and margin trading. So we're on perpetuals, we're on USDT, as you can see over here, and these are the top ranked ones. For this instance, we're going to choose Ethereum. So to do that, you're going to click on Ethereum over here. A quick mention, you can also add things as favorites to create a favorite list. So for example, if you want to trade the top coins, you can select Bitcoin, put a star next to it. Solana, put a star next to it. You can go to Sui, put a star next to it. I've already got that one there. And now we're going to put a star next to Ethereum. Now click on Ethereum. As you can see over there, you've clicked on Ethereum. It shows Ethereum. If you want quick access to all of your favorite coins, it's written on the left-hand side. You toggle around those three lines, it creates the drop-down, and you'll see it says favorites. And when you click those favorites, all of your favorites will be listed below. So we're on Ethereum. We're now on the leverage trade section. And this is where you need to be vitally careful. And the reason why is whenever you're using a form of leverage, your position or even your entire account is at complete risk. And this is the reason why I said it's probably better for you in the beginning to use isolated margin. Why is that? Well, isolated margin will isolate each trade independently. Whereas cross margin, which we can toggle across to over here, there you go. When you click that, it shows you on cross margin. This means your entire Bybit account is at risk. What do I mean by that? What I mean by that is if you take a trade and you don't have a stop loss in play and the trade goes against you, you could risk liquidating the entire account because cross margin borrows from all different positions and equity across the entire account to try and salvage the position. It's important for you to understand and remember when you do leverage trading, you're essentially borrowing money from the crypto exchange. You're saying to the crypto exchange, I have $10,000 and I want access to $100,000. They use that $10,000 as collateral, which is fine. But what you don't understand is that your margin for error is minuscule. Let me delve a little bit deeper into this. Let's go onto a low time frame like the 5-minute chart for Ethereum. Now you can see over here on Ethereum, the chart moves up and down quite a lot. These are price movements that you don't really notice when you're on a higher time frame. And you definitely won't notice these 5-minute moves if you're on spot trading. But if you're on leverage trading, for example, and let's just say, for instance, you want to go short on this trade. So you want to go short on this trade over here. Let's make this a little bit brighter so you can see everything. Going short on the trade means that you're betting that Ethereum will continue to go towards the downside. And you begin to enter into a short trade over here. Every short trade, as well as every long trade, has a liquidation price. Now, the higher the leverage is that you're particularly using, the closer the liquidation price will be to your entry. And what that simply means is if your liquidation price gets hit, let's say your liquidation price is below your stop loss, And the only way that's possible is if you're trading on high leverage, like 50x leverage, 100x leverage, or even 125x leverage. Your margin for error is so small. And if price moves even slightly against you, it will take the initial collateral that you've had and everything else, and basically the exchange keeps that money. You've lost the position, you've been liquidated. So in order to avoid complete annihilation of your entire trading account, it's definitely recommended that you focus on isolated trading. That way, whatever money you commit to that trade, even though you still have a liquidation price, if that liquidation price is hit, you will only lose that capital. So let's show you a couple of examples to take this a step further. Now, we're not going to take this particular trade. This was impulsive. Let's quickly clean that up. We're going to go on to the 4-hour time frame where you can see Ethereum is currently pulling back. And the expectation is that Ethereum should still trade higher. So you can see over here, it's putting in some higher highs and higher lows. You've been putting in higher highs and higher lows, and you've got this horizontal resistance that you want to see Ethereum clear. And if you go into Whale School, under the chart pattern section, you would learn there as well that this is called an ascending triangle. So as we witness this trade opportunity right here live, the expectation is we could take a trade over here along on Ethereum, and price is coming into that level pretty quick. So we need to be quick about things, and we can use our risk to reward tool and actually create a proper trade setup. So we're looking to long this over here. Long means we're betting that price is going to go up, and we want to take profit based on the measured move of that triangle towards the upside at $4,480. So this is what the trade would look like. There we go. Now that we have that in play, we know exactly where we're wrong. We're wrong on this trade if price stops out or if price moves below that little wick over there. And again, more on this will be explained. For now, we want to show you how to take the trade. So we're going to take this trade. As you can see over here, you got to double check, guys, every single time. It says 100x leverage. You will get liquidated immediately. Most traders trading above 5x leverage will be liquidated because your stop loss and your liquidation price are so close together. So for this trade, we're going to go on 5x leverage. Now, to fulfill the order at the current price, which is 3,800, you can either write that in, you can type that in over there, or you can just click in the order book. As you see over here, if I click in the order book, there's small changes happening on the price. So these are orders waiting to be taken. So I'm going to click on the order book, 3,802, and we're going to begin to take a long trade over here. I'm going to take about 10% of the position. Let's go a little bit more. Let's actually make it exactly precise. We're going to write the value over here as 5,000. Now remember, we're on 5x leverage. That means that the cost of that trade, which is written over here, is only $1,000 because I'm using leverage. I'm using some of the exchange's money. You can either pre-fill your TP, which is your take profit and your stop loss, which we've pre-planned. Or if you want to get into the trade really quick, you can just click buy or long, and then we can re-add those levels in a moment. So let's quickly long over here so we can get into the trade. Everything is shown over here, and there you go. Our orders are waiting for price to wick into that level. So you can see over here, there's no position yet, but our order is resting, waiting for price to come into that key level. Maybe for some reason you're a news-driven trader and you know that price is going to move in your favorable direction very quickly and you want to get into this trade. How do you do it? As it's resting over here, you can either go to the open orders section and you can go to this conditional order, which is your ETH trade, and you can make an adjustment under the order price and raise that order price. Or you can come to this over here and you'll notice I can click and drag this. I'm going to click and drag this marginally above that red line, dotted line, and that's going to fill my order. You'll see over here. There we go. All right. There you go. Your entire order has been filled. Order changed successfully. So now we can click on positions and you'll see everything is listed below. I'm now officially in that trade. Now we need to still put in the stop loss. We need to put in the take profit in case we're incorrect on this trade. So we're on 5x leverage. That means I purchased 1.31 ETH using only $1,000, which is quite amazing because remember, ETH is $3,800, which theoretically means that I should have bought significantly less with that amount of money. So let's add in the stop loss as well as the take profit. To do that, you'll need to scroll through to the right-hand side where it says TPSL. Click add, move your box up slightly because everything is written on the right-hand side. You can see the bottom red line over there, or you can move your cursor in alignment with that, shows 3636.06. So under stop loss, we're going to write 3606.06. And that will give us our exact stop loss. If we are incorrect on this trade, we stand to lose $269 of that $1,000 that we've committed. For our trigger price, which is our take profit area, you'll see it says 448.19. So we're going to put in 448.19. Perfect. Now, we're going to click confirm. But before I do that, I want to show you have the ability and the financial instruments on an amazing platform like Bybit, where you can actually set multiple different levels, or where you can take partial profits along the way. So if you don't want to close out the entire position, but instead you want to only take some of the profits off the table when the trade moves in your favor, you'll come through to this section and you'll say partial profits. But for now, let's stick with the entire position. I clicked OK. It says order submitted successfully. So you can see over here, you've got your TP, which now you can click and drag. If you change your mind and you think, well, price is actually going to go higher, you can click and drag this to the relevant level. If price begins to move up and it's a favorable trade and you want to eliminate the risk, you can always click and drag your stop loss above your entry. Great, right? Now, let's take this a step further and show you some other cool tools. These are amazing things which you'll struggle to find on other exchanges. So, one of the things that I want to have a look at is some of the tools that you can utilize to scale into a trade. And the reason you would scale into a trade is to drastically reduce the amount of risk that you have. Now that we've got our trade set up over here and everything is worked out, let's say we want to put more money into the trade, but we don't want to enter at the same price and we want to get in relatively quick. And at the same time, we want to reduce the risk and make life simple instead of manually entering into the trade there and there and there as price moves down. So it's called scaled orders. And in order to get to that section, you'll see over here, it says on the top, trade. And then you got this series of different tools. It looks like a square, a hexagon, and a couple of other squares and circles. When you click on that, it will show you a bunch of options. Under the split order section, this is one of my favorite tools and one of my favorite things about Bybit. You can go and you can click scaled orders. When you click on scaled orders over here, this gives you the ability to create a grid. A grid will allow you to enter into multiple different orders by selecting a low price and a high price. So if you've identified an area of interest where you believe price is going to go, you can begin to scale into trades. And that would look something like this. So for the purpose of this, what we're going to do is we're going to use a rectangle and we're going to say, well, we believe Ethereum could actually move all the way down into this purple box. So if you see that purple box, I'm going to change the color to make it a bit more easy for you to see. We'll put it in yellow. This yellow box over here, if we believe that price may drop a little bit further and we want to fulfill a couple more orders, you can do this. All you need to do is you need to know where the lower price is and where the highest part is of where you want to enter into that order. A reminder, double check your leverage. So the leverage, we're on 5x. This is vitally important because every time you change a coin, it will default to higher leverage. So you need to come back here, make sure you're on isolated, make sure you're on 5x or lower leverage, and calculate your risk. So we have still a bunch of USDT left. We want to put this USDT to work. What we're going to do is we're going to say, well, if price comes down through this yellow box over here, we want to maintain our stop loss in the same place. But if it comes down towards the stop loss, there's a chance that it's going to do something like this. There's a chance that price is going to do this and then it's going to begin to rally. And if that happens, we want to put more money into the trade and we want to get a bigger position in. So how do we do that? You go through to the scaled order section, you decide how many orders would you want to place. I think 10 is a reasonable amount. If you feel like manually changing this, you can do so. There's 12. But for this exercise, let's go with 10 different orders. How much money do I want to deploy between those two levels? I'm going to deploy the rest of the capital. That's what I'm going to do. I'm going to deploy the rest of the capital to put this to work. Now, this is vitally important. You need to know the minimum price at which you want to enter. So the minimum price is 3,692. 3,692. There we go. Let's double check. The bottom of the yellow box is the low price, 3,692. So we got a 3,692. The upper price, well, we've already entered into one. So let's put the next order at 3,787. So 3,787. And now we want to put the rest of the capital to work. What's amazing about this is, as you can see over here, it shows you how much do you want to put. So you can borrow from one grid and put it into another grid. And this is commonly referred to in trading as pyramiding. Now, you want to pyramid, the closer you get towards your stop loss, the bigger the position you want to build. And the reason for that is very, very simple. It means that you have less distance to travel before you're wrong. If you pyramid in the opposite direction, which is an upside down pyramid, the risk that you have is if you buy a whole lot of crypto at the top and price has to travel really far to go down, you're going to find yourself at a massive loss. So you can control the pyramid as follows. We have the upper side of the entry as the lower percentage that you want in. So in this instance, let's say I only want to put 5% in there. Now it's red. The sum must equal 100. I've taken that 5% and I can borrow that into one of the other categories. So for example, I can put this one now as 11. I can put this one as 12. I can put this one as 13. I can put this one over here as 14. I can put this one over here as 15 and this one over here as 16. And then we can go 17 and so forth until you have this set up in a pyramid, buying smaller at the top and larger as it goes down towards the bottom. So let's keep it relatively simple. I'm not going to go with the pyramid approach right now. I'm just going to go simply put with 10% in each bracket over there, and we're going to say long. Alrighty. So we've essentially put in that order. The orders are all listed under open orders, limit and market orders. There it is. There's your limited market orders. What will happen is, because this is the same trade, we don't need to go and preset the stop loss and the take profit. As soon as these orders fulfill, it will immediately be added into the same position over here, which is part of the same area where you have the stop loss and the take profit. So they co-join into the same trade. So now that we have that order set, let's go back over here and click on those blocks again. So there we've clicked on the blocks, and what you can see over here is multiple different orders. You may be asking yourself, well, what is the difference between a limit order and a market order? A market order means that you want to get in or out of a position immediately at the best possible price. So traders will typically use this when they're either experiencing extreme FOMO, fear of missing out, or extreme fear, or if they're news-driven traders that have to react very quickly to trading terminals that are telling them that something big is coming. These are microsecond traders if they're doing it right. And market orders won't necessarily give you the best price, but it will fulfill you instantly. Limit orders, which is this one over here, that's the one that we used, means that price will only enter or exit you at that exact level. So if you predetermine a level and you say, I believe Ethereum is going to drop down to $3,400, and you'll set your limit order over there. There you go. LO for limit order. Price will not fill that order unless it hits that level. And if price comes even one tick, a small micro percentage away from hitting the order, but it doesn't hit, the order will not fulfill. It will only fulfill if it hits that exact predetermined level that you've given. And this is where most of the best trading is done. And the good news is it gives you the exact price that you wanted. Let's say, for example, now you're massively in the profits. So the trades have all worked out, you're massively in the profits, and you want to exit all positions. What you can do is you can go through over here and you'll see it says cancel all. If you click cancel all, which I'm not going to do now because I actually want to be in this trade, as I do believe that the technical analysis will play out with the ascending triangle. But if you want to cancel all, you'll come here and you'll click that button, cancel all, and it will close all of these positions. everything that's open in terms of something with a take profit and a stop loss, and it will close all your limit orders over there, and basically you'll be exited out of all of your trades. Now, we've been through a lot of basic things over here. It's really important that if you want to elevate your knowledge, you need to join a like-minded community. The best way to do that is to use that link in the description below. So the user ID that gets generated, that will be utilized to grant you access into Whale School. The good news is that Whale School isn't the only community that I have. I have a more elite, exclusive group, which is called Whale Room. This is a paid group where people actually pay to gain access. But I've also spoken with Bybit, and if you actually do come into Whale School, you'll get a 14-day free trial. So not only have Bybit paid for your Whale School entry to introduce you to these like-minded communities, which will help you to succeed, but also on top of that, if you complete the full Whale School course, we'll also grant you 14 days access into Whale Room, which is the private Discord community. Another important thing is the user ID generated using the link in the description below is the same thing that I'm going to look at when I give away the $5,000. And to make more sense of everything that you're learning over here, I highly encourage you to join the like-minded communities where they'll be able to assist you along with the journey. Personally, for me, my trading accelerated as soon as I started to join a community. Before that, I was a lone wolf trying to figure everything out on my own, and it took a very long time. Now what we're going to do is we're going to have a look at the traditional finance markets, places, for example, where you can trade things like gold. Gold is one of the most traded assets in the world and also one of the most liquid assets in the world, which is why so many traders gravitate towards it. So in order to do that, again, all your trading is found under the trading function. So what you'd do is you'd scroll down to the bottom where it says explore, and you're going to click over here on TradFi. Once you click on TradFi, it's going to bring up this page. Now, most of the traditional trading happens through a platform called MetaTrader 5, where you can actually create an account right here through Bybit. That will allow you to trade Forex, crypto, gold, and even oil. So if you're looking to trade the currency pairs, which is very popular in the world of trading, you can do all of that right here through Bybit. All you have to do is create a password and confirm it, create your MetaTrader 5 account, and they'll email you the login details, which you're going to integrate and utilize with MetaTrader 5, which is a separate platform. Alternatively, you can still gain exposure by copying other professional traders. So click on that, copy trading in TradFi, and you can simply just come through over here and you can read their statistics. So you want to sift through these guys. One of the best ways to do that is you can look at the top return on investment. This is the number one guy, but that's why he's full. You can see 300 of 300. He's 100% full. The other thing that you can do is you can have a look at the highest follower profit. So Grace, 142% over the last 30 days. We have also another Grace over here, 133%. Let's have a look at this a little bit. All traders, if you sift through all traders, you can toggle between the highest 7-day return on investment. You can also sift between the highest 7-day masters P&L. So how much actual capital have they made? Again, Ricardo comes up on top. The highest P&L for the actual followers, who comes up on top for that? Again, it's Ricardo Trade. So Ricardo Trade is probably a good guy to copy. You just simply click copy over there. And if he does have space, all you have to do is determine the amount that you want to put in. We've used all the money for the trade, so I'd have to close some of those positions. And then you can click copy trade now, right? So it's a great way to get access to traditional traders if you want to trade other currencies. Remember, Bybit also have a sign-up bonus for the traditional finance markets. If you have a look over there and you try Bybit TradFi for free and make a deposit, well, you can earn up to $1,100 in USDT, which adds to that $37,100 bonus, which you can get for joining today. So guys, that is it for this Bybit tutorial. There's so much to discuss. We've only touched the tip of the surface over here when it comes to what you can do on Bybit. Make sure you use the link below. Make sure you get into Whale School. I look forward to seeing you within the community, and I look forward to seeing you becoming a professional trader. I'll see you guys on the next video. But before you go, make sure you check out my crypto portfolio above.